Hello and welcome back. This is David from the Personal Finance Squad. We just finished up our Chapter 1. So thanks for being here. That was a chapter full of cornucopia of information, if you will. It's a very, very large amount of data to suck in. So it's very important to understand that when you're looking at videos, as a reminder, pause it if you want to read the dialogue before I start marking it up as I'm talking. Or you can also go in and download PDFs from the website to look at your leisure. So it is a lot to take in. Make sure you understand it. Make sure you go through the things that you need to do to keep up. And certainly if there's any questions, we can try to address them for you. What we want to do at this point is to make sure that we just go through a quick review of what we've done so we can get onto our Chapter 2 and continue to build this budget out. So again, it's very important to make sure that the income and expenses are understood. The income dictates what you can afford, but if your expenses are more than that, you need to make adjustments. But the whole point from it is that the expenses draw from the income, and that we develop a budget so that the same amount of income equals the same amount of expenses, and the goal is that you will have a zero balance at the end of that given period of a month. So other items we want to talk about here is that we need to protect ourselves. We need to make sure that we have money in the right places to pay for things on a monthly basis and account for the unforeseen things in the immediate and the long-term future in case of an unforeseen event happens that you can't work. So from the basic list here we said, and hopefully you've done it at this point, and you will have exercise furthering this in the chapter to be able to go build these out in your class or for yourself personally. So right off the bat here is identify all the fixed bills each month. Those are the easy ones, such as the car payment. Then we have the bills that occur sporadically, and that leads us into the supplemental account, right? The trash example where the trash is $51. It happens every 3 months, so you have to put $17 aside every month to cover it. Which leads us into the spreadsheet to outline the bills, and a separate spreadsheet to outline the supplemental items. This also will lead you to have not only a general account for this information, but a separate bank account for the supplemental items. Right here we talked about determine the lowest monthly income against the expenses, and that gets back to our bonus checks. In that, if you, again in Jasper's case, he gets paid bi-weekly, which means 10 of the 12 months he gets the normal checks of 2, and then the 2 months a year he gets the checks of 3 for those months. But the lowest amount means he's going to live off every month with just 2 checks. We also talked about employer plans. So these are the savings vehicles down here. 401k, Jasper in his case, he did participate to that, so that lowers his income. Does not have to manage it himself in terms of his budget every month. Miscellaneous unforeseen items, savings, and miscellaneous. And again, those accounts could be combined if you chose to. We talked about here about a 3 to 6 month nest egg if possible. That's the goal. This is something you need to decide, but this is our emergency fund. Very important not to lose sight of the emergency fund. If you run out of money because you can't make more at that point, you can't pay your bills eventually. Rainy day fund and college education. We talked about rainy day fund being more of a mature budget. Those are for things like buying a 64 Mustang. It was the example in our dialogue. Again, this is an optional thing. You need to choose what works for you. Jasper chose to put some money in his college education. So all these savings vehicles right here are at your discretion. You need to figure out what works for you. And as you get more mature and have more money, you can build out more of these and put money in places that you want. Or if you want to keep it simple, you might just again have one savings account, no rainy day, and an emergency fund and a miscellaneous. These are, again, do what you need to do for yourself. You'll figure this out as you go through this exercise, especially with your fellow students or yourself as you're redefining or establishing your budget first time. Bonus checks. We just went through that in the last section. Bonus checks. Determine when they arrive and determine how you want to use that money. So we're really saying the same thing here in this last check mark. Decide on how you want to use the extra money for various accounts. Jasper had $2,239. He divided it by 6 and he took that amount. He decided that he was going to take that money on a monthly basis and spend it. And then down here says maybe I want to put it in other places. So that will conclude our Chapter 1 review. And you can see here there's a lengthy exercise to do some of these things, but once you do it up front, you have money to pay your expenses, you have savings vehicles, you got a little bit for your retirement, in Jasper's case here, and he's paying himself. Very important. Pay yourself. So thank you for joining. I hope you really get a handle on this, and I look forward to Chapter 2 and continuing to build this out and build a future success. Thank you, and we'll see you in the next section. Okay, so that's going to do it for this chapter review. There's a lot of material, so take your time, write things down, review it, and start building out that budget. And as we go further, we're going to see that things are going to be much more clear, and you're going to see the path of what it takes to be a successful finance master. So we will see you in the next section, which begins Chapter 2.